This is October-November 2022, paper 23, question number 3. This question is for limited liability company. As is a normal practice of examiner, he is mixing theory with the numeric question. So requirement A. First of all, requirement A is the theory part. The examiner is asking about debentures. Debentures, loan note, same thing. Debenture, loan note, same thing. He's asking what is the meaning of 8% debenture. Debenture, loan note. We know that company can issue shares through stock exchange. Similarly, a company can obtain loan through public. Yani it's a long-term borrowing. It's a long-term loan for the company. Now he's asking you the definition of the specific word. So which means 8% debenture. Debenture is a long-term liability, 1 mark. 8% is the percentage of interest which company have to pay to the investors, 2 marks. 2025 till 2026 means this amount is going to be repayable by 25 and 26 year, yani financial year. Yani they are asking you the meaning of the term 8% debenture 2025 till 2026. So the answer is 8% is the amount of interest. Debenture is a long-term borrowing, long-term loan. 25-26 means that is going to be repayable at this period. So 3 easy marks. Mainly, the most important part of this question is the equity statement. How to make the equity statement? We know that there are columns: share capital, share premium, retained earning, revaluation reserves, any reserves, and ultimately we will have total. Opening balance, BD will come on the top, and we have the format. Now, in order to complete the format, we have to read complete question. The directors of R Limited provide the following information on 1st of October. Opening balances are given. 1200, 3 zeros are hidden. 1200 for share capital, 145 for share premium, 40 for reserves, and 315 for retained earning. And we need to complete this table. Now, how to complete the table? We have to read the question. They are saying 31st December, company pays dividend of 0.06 per share. Dividend 0.06 per share. Then March, company issue right shares. Then July, company made a bonus shares. Then August, company paid another interim dividend. And at last, SR revaluation. We know date by date, time by time, we will consider the numbers. First of all, tell me the dividend. When dividend got issued, how many shares company issued already? It's a final dividend, and we know dividend need to be deducted from retained earning column. How many shares? So before that, it was 1200 is the value of shares, and par value is 0.5, which means how many? 2400 shares. And tell me, this dividend is before the right issue. This dividend is before the bonus issue. So we will not consider their impacts. Correct or wrong?
Yes, correct.
So 0.06 per share is the amount of dividend. How much?
144,000.
144. 3 zeros are hidden. So 144. Correct? I am going to write 144 here in retained earning column and in total column. This is, we got 1 easy mark. Always remember, there is a question from a student, sir, sometimes you are adding up the share capital plus right issue plus bonus and you are applying the dividend. Lastly, we did in one question, but here you directly applied. So I will tell, please look, Right issue is right after the dividend. So how you can add the number of right shares? You cannot. If right shares and bonus shares are before issuance of dividend, you can consider them. Otherwise, khalli walli, otherwise ignore. So dividend is done. The second line is 31st March is right shares. As we learned earlier how to record right shares, it will be easy for us. You copied that this working of dividend or no?
Yeah, yeah.
Right shares. 1200 was the worth, 0.5 was the par value, 2400 shares were in issue. Company is issuing one for every four. So what is the fraction? 4 divided by 1 or 1 divided by 4?
1 divided by 4.
So this will be my right shares, right? This is number of shares we are going to issue. How many?
600.
600. We know the entry of right share is bank debit. Share capital always at par, which is 0.50, and share premium is on the excess amount, which is the premium amount. Number of shares are 600 shares, which you just told me. They are issuing it for 0.65. Yani bank, the money comes is 0.65 into 600. How much is the total?
390.
Out of which capital must be recorded at par value. Correct or wrong?
Yeah.
So the difference, the balancing figure is the premium. Am I right or am I wrong?
Yes, right.
So what is the answer? Share capital 300 plus, share premium 90 plus, overall total 390 is going to be added. Any questions, please? Any problems?
No.
Bonus shares. Next one is the bonus shares. First of all, tell me the fraction of bonus is going to be applied on 2400 shares or what should I do?
We add the 600.
1200 value, 0.5 was the par value. We had 2400 shares issued, it's BD. But before bonus, we had a issue. Already we had a issue of right shares. Means
Yeah.
600 new shares were issued before bonus. So at the time of bonus, the total number of shares floated, yeah, issued by this company into market were 3000 shares, and fraction of bonus is 1 for 6. So multiply 1 divided by 6. I'm going to get the bonus shares. Am I right or wrong?
Yeah, right.
How much how many number of bonus shares?
500.
Now 500. You copied the working for the right share or not yet?
Yeah, done.
Okay, now tell me, we learned in our classes how to record bonus shares. The entry,
Yeah.
share
First, we
capital,
take it from the share premium.
first of all from premium, and if premium is less, then retain earning, correct?
Yeah.
Should be recorded at par value, no? Share capital is always at par, means 250. Very carefully tell me how much premium you have available.
90.
90 only.
No, no, no. No, it's 90 plus 145.
This is my premium before this transaction.
235.
Yani we do have 145 opening and plus we added 90 in the time of right. So how much? 200?
35.
So the premium available is only this both is 235 only. So out of 250, 235 is going to be taken from premium, and we know the balancing figure will goes from retained earning, which is I guess 15.
Yes.
Share capital is credit. Credit means capital increases on credit. Premium debit. Equity decreases on debit. Retained earning equity decreases on debit, and we knows that the impact of bonus issue is always zero in the total. In the total column, the impact of bonus is always zero. Yeah, line by line, any column by column, there is impact. But at the end result, it doesn't affect our equity. That's the bonus theory, which we learned long back. Then I
Yeah.
would like you to read this next line after you copy the bonus work. Again, dividend.
Yeah, I read it.
Interim dividend. Very, very, very carefully. This is the dividend. Okay, no problem. Dividend is 0.04 per share. We need to multiply it with number of shares. We had 2,400 shares in issue. Then we issued 600 and then we issue 500. Which number we should take here?
3,500.
3,500 shares. How, why and how? Sir, 2,400 earlier, BD, 600 before, and 500 bonus, right? Shares,
Yeah.
bonus share. All together 3,500. There's a question, sir. Here you consider the right and bonus, but when you were calculating dividend for the December 21, you didn't consider the right and bonus. So I will tell you that this dividend is after the right and bonus. That's why we consider them. The previous dividend was before the right and dividend, so we didn't consider them, right or wrong.
Yeah, right.
So what is the amount of dividend?
140.
Dividend needs to be deducted from retained earnings and in total columns. Any problem? We have profit for
No,
the year.
no problem.
Profit for the year. We all knows that profit for the year needs to be added in retained earning. If it is a loss for the year, it's going to be deducted from retained earning. And do we left any number, anything, any point?
Yeah, the revaluation.
Very easy. I usually said that for AS now, the revaluation is very easy thing. Before it was difficult, but now difficulty is moved to A2 as per the new syllabus. Revaluation. Tell me, the item was 80 and now it is 115. So it was 80 and now
Yeah,
115. What you can say?
35,000 increase.
Increase or decrease?
Increase.
We are happy with this increase, correct? That's why it's revaluation gain. Revaluation column is available, so we are going to add it in the revaluation column. All the notes being completed, we will make the total, and this is this part is completed. 12, 15, 17, 50. I guess 0, 75. 103.
1928.
Sorry.
Yeah, 1928.
So that's it for this particular question. Any problem?
No, sir.
Last requirement is also there. Let me share it. Now this is requirement number C. Again is 2 marks theory. Examiner is asking, explain why dividend proposed at the end of financial year are not shown in the company statement of financial position. Why dividend proposed after the date not reflecting in balance sheet? Very easy question. If you remember in our previous studies when we were doing this chapter from the Cambridge study tags, I used to say that we are going to take only dividend paid. Dividend purpose is just an announcement. An announcement has no financial impact. Announcement can never be shown in the books of accounts. Correct? Remember that?
Yeah, correct.
So our proposed dividend should be shown as a note to accounts, but cannot be shown as an expense, cannot be shown as a liability, cannot be shown as a reduction of equity because it is still not approved, because it is still not yet been paid. Until and unless it's approved and paid, dividend cannot be recorded in any books of account. Maximum it can be disclosed only. Just we can write a line after the balance sheet that yeah, we just proposed a dividend of this much bus. More than that, not allowed in the case of proposed dividend. You got my point? And that's all for this particular question. Any questions, any problem, please ask me. And that's done.